Good morning, traders, and welcome to Flow with the Markets Tuesday. It is the 5th of September, 9:30 right now, 30 minutes into London Open, and we're already having some great developments in the market, some really nice momentum after yesterday's bank holiday. So there is definitely a reason to flow with the markets right now, to have an update, to have a look what is broken, what is not broken, and what we can potentially do for the rest of the day and of course for the rest of the week. Of course, you know, those videos are pretty raw. I just jump on the charts and I just analyze them. There are no transitions, no pauses, no nothing. So hopefully you're going to enjoy this. I am going to be trying to be as quick as possible, not to talk too much because the market is running. We are making money right now. So again, let's roll the intro and get straight into it. Alright, so again, you know, we're gonna start with the Dixie. Before we do that, let's have a quick look at the economic calendar. So just this morning, we had the interest rate statement and decision from the Royal Bank of Australia. And we had a pretty nice move on the Aussie, which also kind of reflected on the other pairs as well. We're having quite some momentum because also yesterday was a bank holiday. And usually after a bank holiday, we get a lot of momentum, right? Because again, the banks are opening and we're getting that initial momentum. So we have a speech from Lagarde in 30 minutes that can definitely bring in some volume on the euro. And then we have quite a couple of euro news right there, which is pretty good. But pretty much that's it. We have PPI later for the euro. For US news, nothing too much to worry about. So let's just go and focus on the technicals while keeping in mind that we have a speech from the ECB's president and some PPI incoming right now. Now, the DXY, what did we expect to happen? Well, pretty much we had two scenarios. The first scenario was for us to keep hiking into the highs, to take out the liquidity and then to start retracing. And then the second scenario was for us to have a pullback, 50% tap demand zone, and then continue to push into the highs. And you can see kind of the second one happened, but not so perfectly because we didn't really pull back to the 50%. We didn't really kind of have a deeper pullback into demand, into 50%, and then to take along, the market just pulled back a little bit, filled that very first imbalance right there, and then it just kind of, this morning, it just opened and just rolled to the upside, taking this liquidity, which is the daily high. Right, so again, as I told you, like in the weekly outlook, we have this daily low right there. It was liquidated. Then we have some massive push into the highs. The market stopped for a day on Monday, bank holiday, and right now we're coming in, taking out this high right there as liquidity, which is also right now a daily structure break and also a daily trend change. So we are definitely bullish on the dollar as we suspected, right? So again, right now we have to adapt because this is no longer our valid range. Right now we have a new structure break. We have a brand new area of demand. So where is the market right now? Well, it's making a high. What do we expect after high is made? We expect a potential pullback. Okay, I would really love for this candle to form bullish, so then we can form some imbalance right there. That would be really nice to see, like the market continue pushing a little bit, then we're gonna have a pullback, and then potentially we can continue impulsing for the rest of the week. So I am definitely gonna say overall bullish bias on the Dixie so far. This liquidity gap right there, well, it's not a liquidity gap, it's a break. But again, it's a very nice old high that when taken, we can potentially expect a reaction. Okay, so I don't want to say that this one is going to get taken and then the market is going to dump. That is absolutely possible. But for now, I'm going to stay with a bullish bias on the Dixie, making a new high. So again, what do we expect after a high is made? We can expect for the market to start pulling back. How do we know that the market will start pulling back? Is when we have a 15-minute trend change. And currently, this is how it looks like. Okay, so right now we have two options. You either keep following the flow, right? Or you wait for a TC, you take a short, ride it into the 50%, ride it into the demand zone. And then from there, you look for a brand new trend change to the upside, and then you go long. So that is the game plan right now, right? You have two choices. According to me, when the market makes a massive high and when the market takes liquidity to the left, I would personally avoid taking a long like this because again, the market just took liquidity. It's very high in the range. It's not into discount where I would actually like to take a long trade. So usually I tend to skip those trades, but that could definitely work because I've seen it work a lot of times. And this is why I also introduced like a little rule that we have for one of our entry models. Trades follow the 50-minute until you're wrong, right? Because you're wrong. When you're wrong, you have a trend change and then you just adapt and you go in the opposite direction. Okay, So that's what I'm gonna say for the Dixie right now. Bullish, taking out a massive high, so we can start expecting a pullback. And of course, later this week, I would expect like a bigger pullback to potentially fill in that imbalance right there and then start rushing into the highs from there. So again, bullish Dixie, which means bearish euro. So let's see how that is playing out. Well, very nice actually. So what I also expected on this one is for us to take out the liquidity first, then to initiate the pullback, and then to drop. That would have been the textbook scenario, but no, yesterday the market opened, it gave us a little bit of a pullback. It kind of came in to fill almost the complete imbalance right there, almost to the full 50%, right? And right now, just on Frankfurt Open, the market just massively ran to the downside and attacked this low right there, which is also a brand new structure break. If I just catch this, there's a brand new structure break right there. There is a brand new supply zone. We're having a brand new hourly lower high. And yes, so right now we're about to be tapping inside this very big kind of weekly zone right there that I said we could have a reaction from there, right? So let's see. I mean, as I told you, we can dig in a little bit further right there, but then there is going to be potentially a weekly pullback before we drop, maybe. Okay, so that is why I don't like the weekly too much. So coming into the 4H, once again, if I'm just freshly looking at this chart, the market is making a lower low, it's breaking hourly structure, and it's taking a massive daily low to the left. Immediately that tells me, well, a lot of liquidity has been grabbed. So what I don't want to do is I don't want to go short too much, okay? So what we have right now is a lower low right there, but the market made a lower high and it still hasn't broken the lower low. So what I would really love to see on EU right now is for it to actually take out the low, then to make a trend change, right? And then for me to take a long trade and ride it into the hourly zone. So that is my desired outcome right now. So if this happens, I'm definitely going to go for the trade because right now there is pretty much nothing else. Like if we just look objectively at the market, like it chopped around yesterday, by the way, there was a very nice long. I paper traded it because I was just warming up in the chart, like setting up everything as I used to set it up. Right now, I'm still trading on my kitchen table, so I'm not really into the zone. Lovely long right there. The community took it, targeting the week high right there, that the market started chopping. And again, this morning, just Frankfurt Open and it just massively ran the market down. So currently the last trend change is right there. And the last little supply zone is right there. You can also take the upper one, which is a 30-minute zone. So currently we're trading kind of in this range. So there is nothing much to trade. But as I said, if we break the structure to the downside, which I hope we do, then yeah, we either have two choices. Either follow it to the downside or wait for the market to align bullish and then take it up into the supply. So that is currently what we have on EU. Very plain, very simple. Again, not every session is a trading session. Not every day is a trading day. Not every week is a trading week. Okay, you have to wait. Euro yen, tapping inside that big daily zone right there, right? And we actually, so again, I had two outcomes. We either react from there and rush into the lows, or we either push us a little bit further and then still react. And why do I expect the bearish reaction? Well, probably because, yeah, why do I expect this? The daily is still bullish. Well, yeah, the weekly was a little bit high, but the daily is still bullish. The hourly is right now bullish. So why would I expect a short? Probably because of the euro weakness. But what we have right now is time for adaptation. Hourly broke structure. What caused the break of the structure? We can take this guy right there, and right now the market is kind of making, it made a high, broke up. I wouldn't really take this one as a demand zone right there. So again, we can look at euro yen in quite different ways, and I'm kind of starting to doubt right there because, as I said, I'm really looking at this massive drop right there. It has a lot of imbalance, and as I said, like we can expect this to be used as liquidity for the market to give us a little pullback, right? A deeper pullback right there, and then for it to start heading lower. But right now we are actually bullish, right? And where do I really want to, come on, where do I really want to go long from is this zone, because that is what caused the trend change. This is where the volume is. This zone, did it create any imbalance? Did it actually break strongly? Not really. All right, so if I jump in right now to see what is happening on the 50-minute, it's absolutely not nice. right? Not nice at all. But we are having like a very, very, very choppy price. The market came in, took out the Asian high, and then it technically aligned bearish right there. And then it started throwing wicks absolutely everywhere. Man, this is just crazy. So if I'm just looking at this pair right now, no way I'm trading this. Like, not clear in the 50-minute, not also very clear exactly where we are on the voyage right now. So, but again, let's try to break it down. There is actually a little bit of a structure break right there, which means that this is our current supply zone and the market is getting into that supply zone, which means that you can be getting a 1-minute entry right there. Yeah, there is a liquidity gap. So you can look to trade right here, but personally, I don't trade a price action like this. That is very wicked. That is not looking good. So again, I see two situations on this one. The market could either align bullish, so we can continue flowing with that bullish market because the fall is bullish, or the market can break down and start retracing lower towards this demand zone, from where I would be really interested to start getting into longs, which again, first of all, we're going to be needing to see a 15-minute trend change or even a 30-minute trend change if you want to be with a little bit high probability trend change, right? So that's what we have right now. I mean, there is a short going on right here, which is a short that I wouldn't really take, right? It's not clear. It's not very nice. We took out Asian high. We took out Asian low. We tapped into a probably demand zone right now. So again, long is kind of probable, but the 15-minute is short. I would personally wait on this one. I would wait for one more break, either for it to break into the highs, form a trend change, or for it to break into the lows to confirm that the market is bearish, and then I would follow the next valid range. So that's my EJ. Once again, Tuesday, as a famous member used to say, Tuesdays are like Easter eggs, right? You don't know what to expect inside. Aussie dollar, beautifully as forecasted on this one actually. So again, we grab liquidity on the daily, pushed above the 50% on the daily, fully aligned, pull back lower high, and right now we are just ripping to the downside, almost very close to that daily low right there. So I presume there is not a lot to be doing right now on the Aussie dollar because it's just dumping like crazy. I mean, yesterday it pulled back, took out the Asian high right there, took out the Asian high. Then it aligned bearish right there. But then, yeah, because of a bank holiday, like broke down, broke up, broke down. Then it chop around. So I'm not really sure if you could have taken a short trade yesterday on Aussie dollar. Let me know if some of you did, maybe. But again, here we chopped around, and then during the interest rate decision, the market just rolled, right? Could you have taken any shorts? Well, maybe right there during Asia. Because they were like break of structure, lower high, break of structure right there, lower high with this shit wick right there, and then the market just started rolling. So right now, I would say don't really look to keep shorting because the market is way too low and it's most likely gonna take this low and then initiate a pullback. Okay, and if you want to take a long trade, wait for that low to be taken, wait for the 50-minute to align, and then you can start taking longs. And then of course, like right now, we have a brand new structure break. Let's mark it up. Brand new structure break. We have a brand new supply zone. So again, as the market makes a lower low right now and takes out all of this liquidity, we can start looking for that pullback trade, right? So you're going to draw your range and you're going to wait for a 50-minute trend change at the bottom. You're going to ride it towards the 50%. You're going to ride it towards the imbalance that has formed. And then from there, we're going to be looking for shorts. Okay, so first thing first, wait for the liquidity to be taken. Okay, and then from there, wait for a 50-minute alignment to start going long, which is a counter trend trade or a pullback trade, another word for it. So that's how I would adapt right now on Aussie dollar, patiently waiting. Aussie yen, not trading this one. Again, as I said, waiting for some liquidity to be taken. It looks like the interest rate is not going to give us a very big response. So again, I'm not trading this until we exit this range. NZUSD, let's see. So this one broke up, broke down, broke up. And just right now it broke down. And again, I expected for it to break, to pull back and to continue, or for it to hold and go bullish. Kind of both outcomes didn't really play out exactly as I showed. Again, we broke structure down right there. So we have a brand new supply lower high. And the market is just right now ripping to the downside. So it looks like probably there is also a daily break. Yep, there is a daily break because we're sitting in this very big range right there. So that's a daily break right there. So we have a daily high. We're about to be forming a daily low. So this market is just bearish right now. It's just bearish, but it is in a push phase. It's making a lower low. It's grabbing some massive liquidity right there to the left. So again, what is reasonable and what is logical for us to start expecting is a pullback. Okay. So right now, again, that is your range high. Right now, a range low is being formed. How do you know that a lower low is potentially formed? Well, after we have a potential trend change, right now we have a 50-minute breakdown. We can have a 50-minute TC up. So when this happens, I would potentially entertain the idea of going long, then pulling us back into 50%, and then potentially looking to start shorting. Again, this is a risky trade, by the way. This is a risky trade because it's a counter trend, and sometimes the market just tends to roll massively to the downside. It doesn't tend to pull back to the 50% perfectly. It doesn't tend to even make a trend change. It just keeps rolling down. Okay, so that is currently the supply we are at. Even if you wish, you can go to the 1 minute right there and look for a short trade. However, it's not very logical and it's not very high probability because we just took liquidity, and after liquidity is taken, we can expect a pullback. Okay, so keep that in mind. We're going to be having imbalance to fill. So let's see. I'm calling a counter trend trade right there on the NZD/USD, which is what I would expect also on the other pairs. And NZD/JPY, it is a skip. Now UJ, we see that the Dixie, the dollar, is overall bullish, right? And I did expect like for it to break up and then to start pulling back, but there is no pullback. The market just keeps rolling and rolling and rolling, right? We broke structure right there. So that is the daily supply right now that the market is entering. We're having a brand new 4-hourly demand zone, which is a valid 4-hourly higher low, and the market just pushed. Right, so the range is from here to here. Are we gonna have any sort of a pullback, or are we gonna keep pushing up until we take out this high? I don't know. Let's see how it looks like on the 50-minute. Like yesterday, just chopped around, broke up, pulls back, chop, 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 and right now it continues to push up. So it's very high into the range. And again, I just don't like trading like this. Like the best opportunities are gonna come when you are in proper positioning. All right, so if the market right now makes a TC, I'm going to take a short, ride it into the 50%, and then tomorrow from here, if it gives a bullish 50-minute TC from here, that is proper positioning to go long on this market and then target even this liquidity. Because going long from exactly right there, it's not good. The market is pushing up, it's pushing up, Asian high is taken, liquidity is taken on the left. So again, in order for the market to continue pushing up, it needs to grab some liquidity first, and then it will have the fuel to actually go up. So this is what I would expect. This is like what I would really love to do, like that, what I would really love to take. And if that is my plan, right, then I just wait for it to develop, or I flow with whatever happens. Okay, so this is what I see right now. Preferably a trend change, short opportunity into the 50%, wait for it to align again, and then you go for the highs. That's my very simple UJ outlook. Right now I am not taking a long, although this is very possible that this zone works. It's not a high probability because once again, we're very high in the range. We took out Asian high. There is no sell side liquidity taken in order to fuel a move to the upside. So I'm going to be looking for this low to break, this low to break, and even this Asian low to break before I engage into longs. Okay. USD CAT looks like it's popping very nicely to the upside, but I no longer look at it. USD Swissy, it gave a little pullback, not entirely 50%, which is very nicely actually developed. And right now we're making a brand new structure break. Respectively, we have a brand new demand zone, which I'm going to take like this. And yes, right now we are at a higher high. We're still tapping inside the supply to the left. We're still attacking this liquidity high. But as we make a higher high, what do we expect? We expect the higher low to be formed. So again, like the market impulsed, it took out a 4-hourly high. It took out the Asian high. So right now taking a long like this, well, we don't have a structure break right there. Actually, it's equal highs. Yeah, it's equals. So what I would love to see once again is for it to take out the high, maybe even the liquidity high, then create a 50-minute trend change, then ride me back into the zone, and then again align bullish from here. That is exactly the same thing that I'm looking for in UJ. Right, if you remember, trend change down into the lows, 4-hourly demand, 50%, and then take a high probability long from there. Exactly the same with USD Swiss, because right now it's forming a brand new 4-hourly range from the low to the current high that has formed. So once again, I would love to see that pullback. I would love to see liquidity taken right there before I take a long. Okay, but again, as long as the 50-minute keeps going, you can follow it if you wish. Right, you can follow it. There is structure break is just about to occur. Then that makes this the demand. So if the market pulls back, you can look for a long. But if you ask the question, is there enough steam? Is there enough power for this zone to hold? No, there is not. Asian high taken, hourly high taken, we're tapping into supply to the left, and even if it comes to take out this high right there, you can definitely start expecting a pullback. So there we go, structure break occurs, very good to see. Let's see what happens right now. Let's see if it takes out this high, and after this high it's taken, I will definitely start looking for counter trend trades, although as I keep saying, you can still look for the continuation trades until you're wrong, because you can trade from this zone, it could work out. It could push up, and I have seen it a lot of times working out. So keep striking on your setups. GBP USD as well. Very nice pullback right there. Crushing the lows already. Like again, this is the daily low. We're having a brand new hourly structure break. What the market did on GU is it just came in to fill the imbalance to the 50%, which is perfect, right? And this morning it just opened and it rolled. So right now we have a brand new supply zone right there, and the market is in a very big push phase, breaking the hourly lows, right? And it just keeps going lower. It's most likely going to come in to take out this low right there. Maybe it's going to come in to take out this low. But once again, as we make a hourly lower low, I immediately start expecting that the market is going to pull back. Okay, but currently if you just focus on the valid ranges, there is a 50-minute break, there is a 50-minute supply, so we have two options. You either wait for the market to pull back and you go for a continuation, or you wait for the market to make a trend change, pull back, take a counter trend, ride it into 50% or into the hourly zone, and then from there look for another 50-minute trend change to take it into the lows. So there are my two outcomes, and just by looking at the momentum, it looks like it just wants to drop, right? Like DXY is probably just pumping again, retested the zone, pumps. Euro USD, it also, like, it just broke structure to the downside right now. So we have a valid range. So what you can do right now is you can either take a short from here or wait for a trend change and a pullback trade. But again, just looking at the momentum, maybe the market is just going to roll to the downside. So let's see, right? The current opportunity on GU is this. Either pull back into the zone in a short or wait for a trend change, retest, and then potential longs. Where is it going towards right now? Well, this low, as we forecasted, that's a very macro liquidity area, daily low. So let's see if it reaches that first before it initiates a pullback, and if we can catch a continuation on the way there. GJ. Yeah, well, with the USD JPY pumping up, the JPYs are overall going to be more bullish than bearish. Although I don't like it because, again, you can see, like, for example, right now GU is absolutely bearish, right? But UJ is absolutely bullish. So that makes GJ in the middle, right? So you can see it's massively going down right now, but the overall, like, UJ is strong. So the JPY pairs should be going up, but their USD pairs are going down. So it's 50-50, right? But currently we had a trend change. The valid range is from here to here. The market is pulling back. We have a very nice demand zone right there. So it's overall bullish on the 4H, although it's again like bearish on the daily. So the JPYs are as usual all over the place. Right now we took out Asian high. We aligned the bearish very nicely. And let's check it out. There is a valid supply from here. So again, what you can do is you can try to focus on those continuations as the market travels towards the 50%. You either trade from this guy right there, or you wait for a new one to form and then you trade from it. Okay, so there are the two outcomes that we can have on GJ. Plain and simple, there is no setup right now. Goldie, let's see what happened on gold. Well, it pulled back into supply. Beautiful, oh, man, that is beautiful. I'm getting much better on gold. Maybe I should start trading it. So yes, right now we are potentially about to attack this low right there. So hopefully some of you took shorts yesterday. Man, the short yesterday was actually very good. Asian range came in right there, took out Asian high, aligned bearish, came back for retest, broke structure, came back for retest, broke structure again, came back. Wow, there is 1, 2, 3 shorts yesterday on gold. So hopefully some of you guys managed to catch those shorts. Right now we're coming very close to taking out this low. And I would say right now trading from here, it's not very high probability because we're very close to the low. Yeah, I just actually see that this one is a whole internal range. Where is this thing? Yeah. Come on, man. Where is the brush tool? Okay, I did it here. This is the high. That's the low. So pretty much we were trading internal structure right there. But when you trade like in a big range like this and everything is internal, yes, you can sometimes look for those internal breaks because that is the only choice you have. Or you can shift to like to a 5-minute time frame, because the 5-minute time frame is not going to be internal because there is going to be like a trend change right there. And if you follow the 5-minute time frame, it does work as well. Okay, so right now what I'm looking for gold is for it to break this 4-hourly low. And then again, what do we expect after a 4-hourly low is broken? We would expect some sort of a pullback, lower high, and then I will look for a continuation. Okay, so the trade on gold is gone right now. Wait for a break, and then of course you have to do the same thing over and over again. It broke, wait for a pullback, take another short, and you just keep following the flow. Okay, so yeah, let's wait for this one to break. Then of course you have to find your 50-minute valid range, because right now that's the high, that's the low. So as we break like currently, this could be it, right? So if you break, you can look to either short from here, but you can also look for a trend change as a counter trend trade to pull us back into supply once again, and then take a short. So that is gold right now. Not seeing an opportunity exactly right now. It's actually still contained within the Asian range, so nothing to trade right now. US30, a nice short is going on. Again, as we expected, 4-hourly broke, pulls back into supply, and right now it's rushing into the lows, which is very good. So this is what we would expect to be taken right now, and it just got taken. Beautiful. And again, like this area on the 50-minute yesterday was a whole big range. So that's the high, that's the low. The market pulled back right there, and again, it was all internal between this high and this low. But if you go to the 5-minute, there is your trend change, so you can take the short. In fact, we had a member of the community take the short right there with our 30 to 5-minute approach, right? So just right now, we caused the 4-hourly break of structure, and what we have to do right now is we have to adapt, right? We are gonna take this supply right there, and yeah, we just took out the low, so we can start expecting potential pullbacks, right? I mean, the last supply, the last valid 50-minute lower high is this. So what I would expect to happen is we're either gonna tap in reverse, or we're either gonna be making a TC retest, tap inside the 4-hourly zone, take out these liquidity areas right there, and then from here get a new 50-minute TC and then go short. Right, so that's what I would expect. Let's see what happens. That's US30 right now. Again, all the pairs are taking major liquidity areas, major liquidity lows, so we can start expecting pullbacks. Nasdaq as well, very nice pullback, very nicely rolling to the downside, so very nice bearish bias. It just took out the low once again, so we move our supply to the new valid range, right? And guess what? We wait for the market to pull back and get us a new short, because right now we just took out liquidity. So again, it's not very high probability to keep shorting, okay? But you can do so. There's the last range. We can expect the continuation, but if it makes a TC, pushes back into the 4-hourly supply, then wait for a new TC from here, and then you keep following the flow. Very nice, very simple, but there is not a lot of textbook opportunities right now. And yes, so again, as forecasted also, SPX, break structures to the downside, brand new supply zone. So again, what I'm going to be looking for right now is again shorts, but first hoping to get a pullback, and then we can keep rolling to the downside. And on the 50-minute, once again, just took out the low. There is the last supply zone, although it didn't form very cleanly, right? Two choices once again, either a continuation or wait for a trend change, retest, long into supply, and then we start looking to short. Okay, very, very, very simple. Cryptos, they're chopping around. I would expect a further drop on these. So yeah, just to give a recap, once again, just trying to keep this outlook very nice, very simple. DXY taking liquidity at the highs, and most likely it's headed to the next one. So all the pairs right now are either making a higher high or a lower low. When you make a higher high or a lower low, you expect the opposite to happen. You expect the pullback right now for either a higher low or a lower high. And again, oftentimes the market is just going to keep impulsing until it doesn't. Then it makes a trend change. So right now, again, on all the pairs, you have two choices. You either keep following the flow, or you just simply tell yourself, I'm going to wait for a trend change, then I'm going to take a counter trend trade and then go with, lost my train of thoughts. Take a counter trend trade, pull back into the 4-hourly, 50%, and then we'll look for a new 50-minute TC to go up. Or again, the second outcome is for us to keep longing. So that is the same with EU right now, right? Either pullback and a continuation, or a TC, retest, tap inside 4-hourly zone, and then a bearish TC. And all the pairs are like this. There is AU as well. I told you there is a short running, but again, sorry, that's EJ, short running. And there was the TC. So in fact, you could have taken like a short right there with a safe stop loss above here. And yeah, not a very good risk to reward. But again, as I told you, I would love to see some sort of a confirmation about where is it gonna break. So now it broke to the downside. So right now we have a brand new supply zone right there. So what you can do, pull back to supply and short. Aussie dollar very low, so I'm looking for liquidity to be taken and then to start initiating the pullback. Same for AJ, no, not same because they're in a very big range. NZUSD once again making a lower low, but as I told you, you can keep following the ranges until you're wrong. So there's 50-minute supply, it pulled back right now, and it's most likely going to give us the 1-minute setup right now to take a short. However, I don't like trading at such places when we take out massive lows because usually the market creates a trend change to the upside and initiates the pullback. So this is what I'm personally looking for. UJ the same. It made a massive high right now, taking liquidity to the left. So you can take a long from here, but you can wait for a TC short into 50% and then take the high probability long, right? Same with USD Swiss franc. There it is, taking the massive liquidity high to the left. This is a massive liquidity grab, so right now it doesn't make a lot of sense to go long from here. Most likely, we're going to have a TC to tap us back into the demand zone, and then from there, I'm going to be looking for high probability long. Okay, so always watch for liquidity. GU rushing into the lows. There is the last range. You can take a short from here, right, and push it into the lows, but of course, you can wait for a bullish alignment, take it into supply, and then take a high probability short, right? Same with GJ, just keeps rolling down. Gold as well keeps rolling down, but the trade was yesterday. And then this is exactly the same thing. All of those are making lower lows or higher highs, so we have to wait for a correction right now. So that's pretty much it. No trades for me so far. I'm just very patient right now, just observing the market, see how it goes, and waiting for the high probability trades, not really rushing to be taking any trades. So yes, guys, again, be patient, wait for high probability trades, wait for those higher time frame pullbacks into the 50% on the 4H, and then wait to engage in high probability setups. Avoid trading, avoid buying high, avoid selling low, and of course, avoid going against the trend. That's from me. Wishing you a lovely week ahead of you. If you have any questions, you know where to find me, and talk to you on Saturday.